So in this video, I'm going to show you 5 stocks that I have chosen and decided to buy this morning, which is Monday morning, December 27th, 2021, and I will more than likely sell the following day on Tuesday. And basically, the way that I'm deciding to do this is using strict data analysis, so I'm not watching news or doing anything like that. And I'm just going to pick 5, and what I'm going to do is take this $100 portfolio and just split it up over those 5 stocks. Now basically that means $20 each. So what I'd like to point out is basically part of the process that I'm doing for the analysis. Now first of all, the first one is Kroger, which is KR. It's the company. Alright, so the symbol is KR, the company is Kroger. And with this Google Sheet that I created, we're looking at the last 90 days. You can change the number of days if you want, but you can see it's going to start with September 28th automatically and goes up to December 27th. Now, instead of looking at this, well, first of all, let's actually look at this. What this does is it gives you, basically, it spits out all of the data, the open, low, high, and closing prices on all of the dates between all the trading days between September 28th and December 27th. All right, and then I have these additional calculations on the side, which are basically like calculating the distance between the prices from one day to another. So for instance, the percent change, which is the distance between the closing prices, the open to open, the distance between the open prices, so on and so forth, right? The low and the high, the open to high, the open and close. All right, now, not to get confused with all of that, I want to just kind of focus on what I'm focusing on, which is really certain days of the week when the price seems to where it tends to be higher than on other days of the week. And when I look at this, I'm looking at really there's 4 different price points I can look at. I'm focusing on the open. And the reason why I'm focusing on the open price is because I can program the trade, okay, or I can program the stock to be bought at the open with very little effort, and then I can program it to close as well, right, at the open, which I'll do in a second. So I'll program it to sell at open, rather. So we see that the lowest day is Monday, the highest day is Tuesday. Okay, what does that mean? What that means is that if you're looking at the open price in particular for the past 90 days, the average open price is $41.60. The lowest average open price, where on Tuesday it has the highest average open price of $41.90. Now it is very close to these others, but the thing is, the fact of the matter is, this is the greatest distance that you have in price between 2 consecutive days. Just looking at the average, and these are just averages. This doesn't mean that it's always going to happen this way, right? I mean, but this is just giving me a general idea. But now if I look at so I'm looking at that, and I'm looking at these averages, but then really if you look at the actual data, you can kind of more clearly see the pattern, right? So what I'm going to do here is apply data filter. And when you put this on Monday, I'll clear all of this. First, I'm going to select only Monday and Tuesday, because those are the only 2 I'm looking at. And you're going to see, looking at the open prices, and these are the actual open prices. Monday, October 4th, Tuesday, October 5th. All right, I see that slight increase in price. Another Monday, Tuesday, I see that increase. Another Monday, Tuesday, I see that slight increase. Another Monday, Tuesday, I see that slight increase. I see it here again. All right, 40.14 to 40.75. Right, this was 40.32 to 40.35. I see 42.21 to 41.81. So here it went down. Right, so it's not perfect. Right, I mean, it's not going to do it every single time. The question is, does it do it most of the time? And that's what I'm really looking for. So I do see that it does it. It appears to be doing it most of the time. All right. Now, in this video, I mean, I'm just using this Google Sheet to do this. Well, first of all, let's look at this. Here goes another one that went up, 43.89 to 45.08. Here we went up again, 44.39 to 45.64. All right, and here again. All right, so you can even see like the last 3 times how the price is going up from Monday to Tuesday, from the open to open. Now, I want to say that this is not all I'm doing. There's more. I use computer programs to do some further analysis and calculations on these, but that's basically what I do. All right, that's basically the concept. The concept is looking at the stock, looking at the prices on a particular day, and seeing that if it tends to be higher here than on that other day. All right, and I like doing something like Monday to Tuesday because it's back to back, so that I'm not really trying to hold money for a week at a time or anything. I'm just trying to make a quick small amount overnight. All right, that's basically what my goal is with this particular approach, is just to make a small percentage overnight. All right, now, so that's Kroger. Okay, and that's basically the process. So now I don't have to really go through all 5 of them, but I am going to go ahead and set them up. So first of all, Kroger, KR, I'm just going to go over to Kroger. Now, if you know a little bit about chart analysis, you can even look at the week chart if you're going to do a short-term trade, and kind of see if you can kind of devise an idea of, how you think the price is going to change, or if you think the price is going to go up. I mean, if you have that ability, there is further analysis you can do, right? But I'm not doing any of that right now. I'm just keeping this strictly based on data. So right now I'm just going to go ahead and set it up. I'm going to do $20 of Kroger review order, and what happens is that it's 6:15 a.m. so the market is not open yet, and so what it will do is that it says here your order will be placed after the market opens. That's what I want. I want it to happen when the market opens, because remember, it was the open price that I was analyzing here, right? It's the change in the open price from one day to another. So I'm going to go ahead and buy the $20. Okay, and it should buy when the market opens. All right, another one that I'm going to do is PLD, which is Prologis. All right, so you can look at this one as well. That's also $20 review order. It's the same thing. So when the market opens, it's going to buy $20 of that as well. Okay, next one that I'm going to do is SBAC, which is SBA Communications. Okay, I'm going to wait for that. All right, so I'm taking my $100 and I'm splitting it up over 5 stocks, so I'm doing $20 each. Okay. All right, and that's the idea. Okay, not sure why this is. Just refresh it. Okay, so Robinhood is having a little difficulty there, technical difficulties. All right, $20. And that's done. And then another one that I'm going to do is Casey's General Stores. I'm going to buy another $20 of this one as well. $20 review order. Done. And then another one that I'm doing is AWK, which is American Water. And I'm going to do that one. Okay. Alright, so those are the ones. Now, if I wanted to, so those are set up, alright, and basically, my $100 is now split. If you go to portfolio, you can see these 5 are waiting, okay, so it's going to be $20 on each of these. Alright, and I'm starting with $100 because it's an amount where it's very easy to see the effects, right? If it changes to $101, you know that you gained 1%. If it becomes 102, you gain 2%. If it goes down to $98, you know that you lost 2%, right? So it's very clear and very easy to see how much you're making or how much you're losing when you work with a number like $100. Also, it's small enough that I don't think for most people, it's not like you're going to be losing everything you have, right? But if it is, you can start with a smaller amount. That's the good thing with this approach. Since you're just buying in dollars, you don't even have to use $100. You could have done this. You could do $20 and do $4 each, or you could do $25 and do $5 each. So the different options. Okay, so now if you go back in the video, you can look at the individual things. You can get a copy of the program, the Google Sheet, which is not really a program, but you can get a copy of the Google Sheet, and you can actually plug in the different stock symbols and see what you get, and kind of get an idea of this process. But basically, the way I'm actually finding these, I mean, there's more of a process to it. It has to do with more advanced coding that I do. I'm a computer programmer, so there are other things that I do. However, if I'm giving you symbols to check out, you can go ahead and plug them in here, and you can do some of your own analysis on your own level, looking mainly at what days of the week seem to have these higher average prices, or what days of the week have some lower prices. Now, as of today, this is more or less an experiment. I feel that there's some validity to for certain stocks, maybe not all stocks, where they tend to be a little higher on some certain days than the other. And I feel that if I split up my investments over several of these stocks, that it's going to tend to net out positive. Not in large amounts, but small amounts positive. I've seen it work so far a few times. It's small amounts, but you can make these small amounts in a short period of time and in a relatively simple way, since the stock market does not involve, it's not complex. You just really have to set it to buy and then set it to sell, and that's really it. All right. So that's pretty much the key to this. So find a link in the description of this video to get the copy of the Google Sheet. You can look at the symbols that I picked for, and understand that because I picked these today for Monday, Tuesday, 2 months from now might not be the best choice. So this is what I came up with as of today on the date December 27th. Might be different January 27th. So if you're watching this in the future, still get the Google Sheet, still look at the symbols, but understand that the results that you're going to get on them is going to be different from might be different from what I'm looking at here today, right? You might get different results. So what I'll do when the market opens, I'm going to see the results of what I just did, and then I will most likely make a video and look at some of the results and see what's happening with these stocks. So again, check the link in the video, get your copy of the Google Sheet, and if you want to experiment, conduct the experiment with me using a small amount of money, which is what I suggest, very small, something that's comfortable for you to use. Go ahead and do that. It's Mr. Mark. This should be Google Sheets for stocks, and I'll see you around on another video.